How's it going, everybody? Welcome to my channel. For those of you that don't know who I am, my name is Ivan, and for the most of you that do know who I am, you've probably seen me on Instagram or TikTok Live, and you guys are here because you want to see my model. And today I'm going to be showing you my model. I'm going to explain how I find my bias, and I am going to teach you how to trade. It's really easy. And once you look at it, you're not going to look at the market in a different way. Trust me, this is the way that I look at the market. Nobody else that I've really looked at looks at the market this way. And today was actually a perfect representation. And today I saw exactly everything I wanted to see play out. And that is why I am making this video today. Today, my entire model played out to the T, and it got you the shorts, and the market is still dumping, and yeah, it's insane. Like, it's playing out right now as well. So without further ado, let's get into it. The first thing that I'm going to talk to you guys about, and the question that everybody always asks me, is, Ivan, how do you find your bias? Okay? Bias and draw on liquidity are two different things. Okay? There is a bias. There is your daily bias. Okay? Draw on liquidity is where the market is currently headed towards. There can be a main draw on liquidity, and there can be, I don't know, opposite word of main. I don't really know what to use here, right? But there are smaller draws on liquidity, right? All of that is going to align with the bias. Okay? If you're bullish, at the start of the day, the market is going to go down. The draw on liquidity is going to be lower. Why is it going to be lower? Think about it this way. When you look at the market, when you look at Apple doesn't just go up, right? Apple goes up, it pulls back, it goes up, it pulls back, it goes up, it pulls back. Why am I telling you this? It's the same exact thing with the regular market. Goes down, goes up. Goes down, it goes up. Now, before it can go down and up, right, there has to be some kind of manipulation. Before the market can go down, it first has to go up, right? And before it goes up, it can remain flat. And that's where you guys get this idea of a power of 3, all right? The market has to go up, and then it has to go down. I don't really look at this, though, all right? This doesn't really exist in my books, all right? I only look at the manipulation, and I look for the distribution, all right? And that's how I find my bias. If I am bullish on the week, all right, let's say we have Monday, Tuesday, Wednesday, Thursday, Friday. If I am bullish on the week, remember what we talked about, right? The other week ended like this. You guys see it now? Do you understand how I get my bias now? So we have Monday, Tuesday, which is our manipulation days, in which the market is going to go down. And around the end of Tuesday or coming into Wednesday is where you're going to see the market bottom out and actually start to reverse. And then it comes into Friday. When you come into Fridays we tend to dump, all right? But Friday is also a day where it's just going to pick a direction, and it's either going to continue with where it was going, or it is, like I said, just going to dump and go all the way down. But that is how the week is broken up, all right? Same exact thing applies if I was bearish, right? The market is dumping, right? But it's the start of the week, so guess what we want to see? We want to see it come up, right? And then sell off. And then at the end of the week, it's either going to pump or it's going to fully just bleed at the end of the week. And that is how I get my daily bias. Then I break it up into the individual days, right? So I know, okay, Monday, if this is my bias, right, this is what's probably going to happen throughout the day. And that's how I formulate my trade based off of that. Now, Tuesday, right? Same exact thing follows, but sometimes on Tuesday you can catch the reversal. Wednesday is the best day to trade. Wednesday is the highest probability day to trade. And that's the day that you'll see your targets actually get hit majority of the time. And I'm talking a heavy majority. Coming down, I'm now going to show you my model. The only indicators I have on my chart are the Ivan Trades LLC and the ICT Kill Zones plus Pivots TFO. If you guys want to get that indicator, it's this one right here, ICT Kill Zones plus Pivots TFO. The Ivan Trades LLC is the levels that are given by my indicator that I made. It's provided to everybody in my Discord server, and we take the trades based off the levels. And yeah, there's levels both on ES and on NQ, and they play out very well. Now I'm going to turn off that indicator, and I'm just simply going to show you the trade that I took. It was this. Well, I need to have the indicator on because I just want to show you that I had a level here, right? You see that level? And I also had true day open here, which was right there. If you guys true day open, which was right there. And if you guys don't know what true day open is, level lined up perfectly with true day open, maybe a point off. If you guys don't know what it is, it's the price that market opens at midnight. And because it's right there, right, I saw that price ran up into it, it rejected it. Initially it rejected it, and I saw sellers come in, and I was in the shorts, and I had a 50 tick stop loss, all right? I had a 50 tick stop loss. I take all of my trades with a 50 tick stop, okay? Targets were London low, New York PM low. Both targets got hit, okay? Now, why did I actually enter the trade, okay? Let's zoom out. Look at this. This is really clean. We have Asia low and we have London. What does London do at the end? It takes out Asia low. You could say it turtle souped it, right? On a higher time frame. I bet you if you moved on to the 15-minute, it would be a wick, right? Something like that. It took out the low and now bang, it's right back up. That's perfect. That's what I want to see. And that's how you know that these longs are going to play out. But they're riskier longs to take. Let me start off by saying that. My model consists off of the first part being the liquidity sweep. There has to be a sweep. It either takes out the high or it takes out the low. In this situation, it took out the low. After the low was taken, you can see that the market souped and it came up. This low breaking was not, and by no means does it matter that this is Asia low or not. This can happen at any time, and I'm about to show you it happening right now in the market, and it's not with a low that's Asia low. But it doesn't matter that this is Asia low. A lot of people think that this is where you go short, right? And they get stopped out like that. This is no good. They think, all right, this is where it's now going to go. They get stopped out, and then they start seeing it rip up. And then guess what they take? Once it comes up, they take their longs. They have their stop loss, whatever, but they think it's going to the high. And guess what? It never ends up going to the high, and they end up losing twice. This would suck. This would hurt you, right? Now I'm going to show you the way that I look at the market. We got the sweep. This does not mean go short. Instead, this means wait. Wait for price to come back up. When price comes back up, and you can use one of my levels, or you can use 0.5 of the range, you can take the high to the low, you can wait for price to come back to 0.5 equilibrium here. Once price gets up there, that's where you want to see a rejection of the sellers. Once you see the sellers reject here, you're going to see a continuation lower and a new leg to be and a new low to be made. Once again, there's a fake sweep. Right? Fake sweep. This is fake shorts. You are not shorting here. You can buy there, but just know it's riskier because you might get a situation where, it takes the low. Like right here, it took that lunch low, but it ripped right through it. I was on TikTok live teaching this concept to 100 people that heard it before this video was released. If you were one of those 100 people, comment down below. But right here, it just absolutely ripped right through New York lunch low. And right, you had to wait a bit obviously, but it bottomed out at one of our levels, which is why I have it. And we also had an ES level here, which played out to the tick at the low here, right? Which is why we got that reaction. That's not the point. The point is that I took these shorts off of my level in true day open with a 50 tick stop targeting London low. After, and I'll go on to the 1 minute here and I'll show you what happened. right? You guys can see we clearly dumped. We rejected the sellers from the middle here and we dumped, right? What happened here? We took out London low. You see London low is right there. We took out London low to the tick, a few ticks in drawdown, and then it pulled right back up. It put in an SMT. By the way, this is the pullback I'm talking about. All right. Now you're probably wondering, Ivan, this is bullshit. This doesn't happen. All right, whatever. You have an SMT here. You guys can see this SMT right here. It's pretty clear. Next, what happens? We take out New York PM low. This is where ICT teaches you have to go long. We have now swept the liquidity. We are now bullish, and this is where you probably lost. Take a look at what happens. After it breaks it, and by the way, I know a lot of people that trade this way. You don't want to trade this way. Once it breaks this level, I'm getting into the trade. And then it like breaks this level, and then you're cooked. And then guess what? You get into longs, and then you get cooked again, right? How many of you guys have been in a situation where it's like, oh, if it breaks this low, I'm in, right? And it breaks the low, you get cooked, and then guess what? Oh man, these longs are gonna play out, and then guess what? It doesn't play out. It stops you out on both. You blow your account. It's probably happened to you. Let's be real. Put the ego aside. We took out New York PM low. Look at what happened. Right? We got the sweep. After the sweep, there's always a pullback. Why? Why is there a pullback? It needs to get more sellers. It needs to get more power to move the market lower. Okay? Pulls back, gets the sellers. We continue lower. All right. Now, what happened here? After it ended up taking out this low, by the way, I'm still bearish, right? I'm thinking we're still going to go lower. And oh, we actually did make a new low. But right here, we took out that low. After that, we pulled right back up. I still have the same exact theory, right? Reject the sellers, and then continuation lower, right? Now take a look at what happens here. And this happens again and again. Takes out the low. What does it do? Fake shorts. You get cooked here. You get cooked if you take shorts here. And guess what? You get cooked if you end up taking longs after. It's not how you read the market. Look at that. You get stopped out on both. Instead, you got the fib. Bang. Right? You guys know how I draw out the fib. If you guys didn't check out that video, I have it linked in the card right up here. Right up there. But yeah, there we have the fib, right? So we know that these are now our targets for the NQ. And guess what? You can take your entry off of 0.5, 0.618, 0.705, and then you can hold it. Next thing happens here. Takes out the low, fake shorts. You never want to enter that low, guys. It's all about entry. Wait for price to pull back, retest the sells, get some kind of zone, get some kind of imbalance. It really helps a lot if you guys have order flow and you guys can visually see the sellers come in at that area. And that's why every single time that you guys see price take out a key form of liquidity, like right here, New York AM low got taken out, right? You see that pullback and it manipulates something. It's because it needs to get more power, and that is where your entry wants to be. And that right there, that was... this was the main reason that we fell today, and this played out perfectly on a higher time frame, which is why I wanted to make the video today. And okay, this does work on every single session. It doesn't matter the session; it will always work. And even this one right here, this specific Asia short, I remember it. We took out the low, we pulled back, we retested the sells. This was the short that I took. I actually had my stop a lot tighter for this one too. To a new low. It's not much, but you know where the market's going to reverse. You know how to read the market. And eventually, when you catch that big move, all you need to fully understand is just when we take out liquidity, right? Here we're already bullish. Look at what happened right after. Gave you a perfect opportunity for you to get into buys right there. Retest of the buyers in this area, right? And that is my model, right? Waiting for the fake sweep, waiting for price to come back down, right? 0.5, 0.618, right? That's I don't usually use the fib. I just have it mentally drawn in my head. I know where the levels are at, and that's where I'm looking for price to reject out of. I also have imbalances. I use order flow and different profiles to see the areas where there is zones that price can reject from. But that's going to be it for my model video. This is a 15-minute video. I hope you guys understand it. If you don't, you can ask any questions. I feel like I explained it pretty well. It is mechanical, so you don't always have to be taking a trade right during a specific time. Like I said, you can do it at any time during the day. It's just how the market moves. But yeah, if you guys want to know more about it, you guys can join my Discord server. The link is in my description right here. And make sure you guys like, subscribe, comment any questions you guys may got. And as usual, boys, stay printing.